So here we are at the New York Stock Exchange, and I'm here with Kenneth Polcari from ICAP Corporates, and he's going to give us a review about what happened in the markets today. So, Kenneth, what did you see in the markets today? What was the reaction?
Well, you know, the markets were clearly under pressure from very early this morning based on what had happened overnight in Asia, what had happened overnight in London, and taking into account the S&P downgrade, which happened over the weekend. Although people had a lot of time to think about it and digest the news and dissect the news, in fact, it did create a catalyst for investors around the world, for economists and analysts to kind of sit back, reevaluate some of the macro data, reevaluate some of the growth forecasts going forward, and what we saw today was kind of a difficult, pressured day.
What was the environment during the day here? Some news outlets were saying, well, panic in Wall Street, but you were here. How was the environment here?
Right. It wasn't panic by any stretch. You know, panic would be when you felt like everyone was just throwing it out the window, right? They weren't doing that at all. There was a concerted effort. There were people raising cash. There were asset managers clearly selling, liquidating some positions. I mean, volume was explosive. We traded over 8 billion shares in composite volume, which is now way up based on what we had been doing. So really what that indicates is that you've got asset managers really getting involved. And they're getting involved because the outlook going ahead has now changed. And so therefore it causes them to reallocate, raise some money and reallocate investments.
What do you think of S&P decisions?
I think the S&P, you know, their decision is not so much a downgrade on the U.S. as if we're going to default on our debts. That I don't think was ever the point. I think what S&P did was made it very clear that the political theater down in Washington, the dysfunctionality that's been taking place over the last 3 weeks has got to stop. That congressmen and legislators and senators have to come together to deal with the very important real deficit spending issues in this country.
And what do you think about other decisions that came today, like the downgrade of Freddie Mac and Fannie Mae?
Well, you know, that was just more negative headlines, right? So the market is really event-driven. It's not so much trading on fundamentals at the moment. It's reacting to each and every headline. So every time there's a headline, the market kind of analyzed it. Was it a negative headline? Was it a positive headline? If it was negative, they crushed the market. If it was a positive headline, they tried to take the market back, but there was sellers, you know, sitting right there because people were liquidating positions. So any headline today, whether it was S&P downgrading Fannie Mae or Freddie Mac, whether it was Moody's coming out saying that they have the potential to downgrade us in 2013, whatever it is, it was a negative headline and the market certainly reacted to it.
And what does this mean for the average consumer in the U.S.?
Well, ultimately, you know, you could say that a credit downgrade for the U.S. is going to cause interest rates to move higher. If interest rates move higher, that means mortgage rates go up, revolving credit card rates go up, auto loans go up, education loans go up. And that just means it becomes more expensive for the average American to fund and to pay for, you know, things that they need along the way. So housing is going to come down because mortgage rates go up. If the cost of education is going to go up because the cost to take out a loan is going to go up, maybe some students and parents will choose to go to a different school that's less expensive. So there'll be a lot of consequences as a result of this.
And what about the impact in other markets like Latin America?
Well, I think that markets around the world are all under pressure, and until there's more clarity on the economic front from everywhere, there's got to be clarity out of Asia, there's got to be clarity out of Europe and their sovereign debt issues. There's got to be certainly much more clarity in the U.S. down in Washington over our own debt issues. Until that happens, I think you're going to see global markets continue to underperform and be under pressure. There's got to be some stability. Away from that, there's got to be some stability in macroeconomic data, just in terms of growth and recovery in the global economy. And until that happens, I think we're going to see global markets continue to fluctuate and be volatile and be under pressure.
What do you expect for tomorrow's session?
You know what, we closed right on the lows today, which typically is not a good sign for tomorrow. So you might expect further weakness tomorrow, but a lot is also going to depend on really what happens in Asia and Europe tonight. I think the sense is that Asia will once again be under some pressure, and if that happens and doesn't stabilize, I think we're in for another rough day tomorrow. But I think at some point it becomes clear to investors around the world that prices are getting to a point where they're actually a buy. And so you will see a natural floor to the market at some point. Whether that happens tomorrow or whether that happens later on in the week, we'll see.
Thank you very much. It was Kenneth Polcari from ICAP Corporates talking here with us at the New York Stock Exchange for Univision News.